Welcome, everyone. It's about 1 minute to the hour, so we'll be starting the weekly briefing soon. So it's noon, and I see that there are still several lines that are dialing in, so we're going to wait for another 60 seconds before beginning. Good afternoon, everyone, and thank you for joining us today. I'd like to welcome you to FortneyScott's COVID-19 weekly briefing. These briefings will be held every Monday and will cover the latest topics and developments with regard to COVID-19. This briefing will also be recorded. If you have registered for this briefing, then you have automatically been added to the list of registrants for all future weekly briefings. These will continue as long as circumstances develop with regard to COVID-19. This week's presenters are Elizabeth Bradley, John Clifford, and Burton Fishman. Just a couple of preliminary items. If you have a question, please feel free to send your question in the GoToMeeting question box. The presenters will be provided with your question. We will try to get to all questions during the briefing. If you need more information or assistance in these matters, please feel free to send an email to info@FortneyScott.com. I will now turn the time over to our presenters.
Hi, good afternoon, everyone. Thanks again for joining us. As was just mentioned, this is John Clifford, and I'm joined today by Elizabeth Bradley and Burton Fishman. I just wanted to give them a chance to put a voice with their names. So, Elizabeth, if you'd like to say hello. And Elizabeth, if you're there, if you'd like to say hello, you may be on mute.
Oh, I apologize. I was. User error to start this off. I apologize. Welcome, everybody. Thank you very much for joining us today.
And this is Bert Fishman.
Like
the same welcome. Yeah. Right. There's a time lag that we'll try not to get in the way. Just thank you for joining us. I hope this will be a useful webinar for you.
Thank you both. And this is our second weekly briefing that we started. As for those of you who've joined us last week, you may recall, and for those new to the briefing, our goal here is to simply see if we can take about the next hour to see if we can distill what's come out, whether it's legislation, regulations, or different agency guidance regarding these laws that have passed, and see if we can work through those with you over the next hour and distill what's come out and hopefully provide a little bit of guidance on some issues that we've selected for today. If you have questions as we go, this was mentioned, please submit them in the question box, and we'll try to get to as many of those as we can. Now, just a little bit about FortneyScott for people who may not be familiar with our firm. We are based in Washington, D.C. We're a woman-owned law firm, and our focus is very much on the agencies that regulate the workplace. And many of the attorneys at our firm have extensive experience dealing with those agencies, and those agencies are the ones leading this effort to implement and codify the regulations that we're going to be discussing today. If we could just turn to the next slide here. I'm sure as many of you know, this is not meant to, this is general information that we're providing. This is not intended to be specific legal advice, but we do encourage any of you to either seek advice from your corporate counsel or outside counsel to ensure that your specific situation, your particular facts are accurately assessed as you're working through the issues that we're discussing today. And I'd just like to briefly discuss the agenda before we jump into the substantive portion. And so as we go through this, we're going to provide a brief update on the paid leave provisions. For those of you who were on last week, that was the topic, the primary topic of discussion. There have been some changes there, including the Department of Labor's regulations that have come out. So we'll spend a little bit of time just bringing you up to date on where we are in those. And from there, we'll spend a large portion of today's time covering the unemployment provisions of the CARES Act and the unemployment compensation and assistance changes that are being implemented as we're moving along. And finally, we're going to address the Paycheck Protection Program and how that could impact employers and businesses with regard to retaining their employees on the payroll and using this legislation to assist them moving forward. All right. And with that, we can move on to the next slide here. So as I mentioned, there's been some updates and changes with the leave provisions, namely the expanded FEMLA leave that's provided and the emergency paid sick leave. Those are both provided under the Families First Act, or the FFCRA as it will be referred to throughout these slides. First off is this legislation became effective last Wednesday, April 1st. And as of that time, employers have certain obligations that they need to abide by. First among those is, and possibly most straightforward, is the poster requirement. Employers are required to put up posters with employee rights, essentially, that describe to their employees the rights that they have under these new paid sick leave laws. The DOL has made these posters available on their website. As you can see, we've provided a URL where you can find those posters. That's the Department of Labor website that has a significant amount of resources specifically for the COVID-19 pandemic, including guidance and these posters. There's two separate posters. There's one, the standard employee rights posters, and there's also one for federal employees' rights. I would also just note that there's a frequently asked questions link if you go to the DOL's website that just addresses some issues with regard to the posters. One thing I just wanted to note is obviously putting these posters up in a common area, as is commonly done, may not be the most effective way to distribute these, as many employees are not at the workplace. The Department of Labor accounts for that and does make note that these posters can be emailed out or put on an intranet or external website that employees have access to. But I would encourage everyone to review those questions and answers that are provided there. And if you haven't done so already, certainly get the posters and get them posted as required. And moving on, if we wanted to turn over to the next slide here. So as we mentioned, there's the paid leave provisions went into effect on April 1st, and the Department of Labor issued their regulations on that day. They addressed the implementation of paid leave, and that's both the emergency paid leave, which covers 2 weeks of paid leave, and the expanded FMLA, which can extend paid leave for an additional 10 weeks on top of that. Of course, these regulations have the force of law. It's incumbent upon employers to go through them, understand them, and abide by the obligations that are in there. Now, for those of you who did join us last week, we included many of the informal guidance which had been distributed by the Department of Labor in our session. Namely, there had been a large amount of questions and answers that had been published ahead of the regulations by the Department of Labor. Generally, these regulations now follow that informal guidance, but there are a few key issues clarifying some outstanding questions from the informal guidance And in fact, in several areas, the regulations do make reversals from what was in the previous guidance. So we really wanted to focus in on just a few of those issues where we saw either material changes or that added some clarity to questions that we still had before the regulations were issued. So we're going to touch on a few of those, and the first one, if we roll to the next slide, please. So the first change here is, and this I mentioned actually a reversal from the previous guidance that had been put out, and that's dealing with employers requiring the use of other leave, of other employer-provided leave, concurrently with the FFCRA paid leave. Under the previous guidance that had been issued by the Department of Labor, it was quite expressly included in there that only the employee could elect to use other paid leave that was available, but the employer could not require substitution of paid leave during that time of expanded FMLA for those final 10 weeks. This is one area where the regulations now appear to do a 180, and they appear to allow the employer to require the employee to use paid leave with the expanded FMLA. Again, with regard to these regulations, this is just with regard to using it with the expanded FMLA. So those, not the first 2 weeks of leave, but the remaining 10 weeks thereafter. And there's several sections of the regulations which say this, that the employer can require the use of other paid leave, whether it's paid time off or sick leave, to be used concurrently with this paid leave under the expanded FMLA. The Department of Labor has updated their questions and answers. The guidance that had been previously provided, they've updated that to reflect this change. We note that that's a question and answer 33. Just a quick note on that, for people who have been using the questions and answers, when there are updates, unfortunately, as of now, they're not annotated. So you really have to keep a close eye on those, and we'll do our best to keep everyone updated through these as well, where there are changes made. And I did just want to make one note on this, and why I said that the regs appear to now allow the employer to require to do this is there is one remaining section in the regulations which still does say that the employer may not require substitution. Obviously, this appears to be a contradiction, but given that the DOL questions and answers have been updated to allow the employer to require this, and that other than this one section, it's consistent throughout the rest of the regulations. This appears to be a holdover from the previous guidance, but we are trying to get further clarification on that and whether that will be corrected. But it certainly appears as if the employers can require this, and that would be consistent with sort of standard FMLA allowances. All right, so we can roll over to the next slide to touch on some additional points here. One that we wanted to note, especially with the prevalence of teleworking here, is the use of intermittent leave. Intermittent leave, especially with some of the uses of leave, for instance, watching a child at home, where there may be two caregivers at the house and you need a few hours to watch the kid. Maybe one parent may do it in the morning, another in the afternoon. So this is something that we've been seeing a lot of people using, is this use of intermittent leave. And just a couple notes here, it is only available if the employer agrees to it. So that's something that certainly employers need to look to see if it's something that they can make work for their specific circumstances, and have those discussions with their employees. And one key point here is that with regard to intermittent leave for teleworking, the Department of Labor has gone ahead and said that the continuous workday rule will not apply in those situations. Typically, under the continuous workday rule, you would be able to count hours worked as from the first principal work activity of the day until the last principal work activity of the day, apart from longer breaks. But here, they're putting that aside and allowing for intermittent leave only for the hours actually worked, even if it's short breaks in between those. So that it does allow for more flexibility in scheduling. It certainly, under the circumstances, is understandable why they would do this, to allow for to sort of pick and choose the times that you may be able to make those contributions from teleworking. But certainly something we wanted to point out as it could have a significant impact on how you're tracking time.
John, with respect to tracking time, since the law doesn't expand the 480 hours of FMLA leave that's available, I assume that the use of intermittent leave, as you've just described, also requires some fairly careful time tracking and documentation.
Absolutely, and that I think is important. Why the employer has to agree to this, and certainly I think any employer that is considering this should make sure that they have the setup available to them to track time as needed in these intermittently, if necessary, but to track what is working time specifically and what is FMLA time, because it will cut into that available FMLA leave time. And obviously, you do need to keep track of all hours that are actually worked. So that's an important consideration. Thank you, Bert. And we can just touch on one more point here before turning this over to the unemployment compensation. If we could roll here, thank you. And that is one clarification that was made in the regulations is what is meant by a quarantine or isolation order. And if you recall, for the initial 2 weeks of emergency paid leave, one of the reasons an employee can take leave is for if they're subject to a quarantine or isolation order. There had been some question of what that meant, and the regulations have made clear that that does include what we're seeing a lot of, which is these shelter-in-place and stay-at-home orders. Those would qualify, whether it's a state or local order, as a quarantine or isolation order under the emergency paid leave provision. But importantly, the regs also clarify that an employee may not take that emergency paid sick leave if the employer has no work as a result of the stay-at-home order. So if an employer closes down because of a stay-at-home order and an employee is at home while the business is closed, they're not eligible for leave. There's no work for them to perform, and under these regulations, they would not be eligible for paid leave. Obviously, under those circumstances.
Oh, I was just going to, sorry, there's a little delay, I apologize, but just going to chime in is we're going to talk about these elements in a moment, but you're going to see a connection between where leave is not permitted, and you're going to see these exact reasons where leave is not permitted, unemployment compensation is permitted. So there is an attempt to bridge between the leave reasons and the unemployment compensation eligibility reasons.
Right. Yeah, absolutely. And so while this does appear to limit the circumstances where an employee would be eligible for the emergency paid leave, as Liz just noted, it may open up those opportunities under the unemployment. So actually, that's a great transition. So if we want to roll forward, I can turn this over to Liz Bradley to discuss some of the unemployment compensation benefits that are available.
Thank you, John. Appreciate that. So moving over into the CARES Act, there were 4 different sections that spoke to the individual's benefits with regard to unemployment compensation and benefits. They can kind of be divided into 2 broad categories. The first are expanded benefits for individuals who were previously eligible for unemployment. So the population of our workforce that was already eligible or receiving unemployment benefits. And those 3 sections were the increase in the benefits. There was a temporary funding of the first week, so there's getting rid of the first week where they were not eligible, and then additional financial. And we're going to talk about all of those in the next slides as well. And then the 4th section, which is section 2102, that is where most significant change has been in effect about the eligibility, and this is where it's expanding the reasons why individuals are eligible for unemployment, significant eligibility expansions. But first, in the next slide, we're going to go in a little bit more detail on the expanded benefits for those individuals who were previously eligible. So as I touched on, the first week waiting period has been removed, so they are eligible immediately. The second element, they receive an additional $600 a week in addition to whatever the state-determined benefits are. This is a pretty significant amount of increase in the compensation. To put this in context a little bit, the median amount of state unemployment eligibility, it maxes out around $450 a week. So that's the median of the various states. So this is adding $600 on top of that. And if you were to look at what just $600 a week looks like, that's on average, that's at about a $31,200 a year. So if you combine the median state of $450 and the $600 add-on, you are getting into a weekly income that is the equivalent of $54,000, obviously before taxes. So this is a significant additional compensation benefit for individuals receiving unemployment. In addition, they're getting 13 more weeks of benefits, and that includes both the amount of that they would be eligible for under their state, as well as that additional $600. And where this 13, and you're going to see this number, you're going to see the number 39 come up in the next slide here in a moment, but most states provide 26 weeks of unemployment. So they're adding an additional 13 weeks on that. So individuals who were previously eligible and eligible for unemployment under traditional eligibility criteria now are going up to 39 weeks of benefits. And a caveat on this is the state employment requirements to continue to seek employment all apply to these additional 13 weeks under the traditional reasons why somebody is out on unemployment. Moving on to the next slide,
Liz,
we're going to. Yeah, sure.
I just chimed in. We received a question through the question box, and just one thing, especially in comparison to the leave laws, do these unemployment laws apply to large organizations? Well, I guess employees from large organizations as well. Obviously,
Correct.
The paid leave only applies to the under 500. So if you could just take a moment on that, that would be great.
Yes, this is applicable to all individuals seeking unemployment.
Yeah.
Correct.
Right. Okay. Thank you.
Yep. So moving on to the next piece is this is we're going to see some of the significant changes, and this is effective January 27th, going through December 31st. This provides. We're going to talk about who's eligible in a moment, but the benefits that are being provided under the expanded COVID-related unemployment mirrors the expanded benefits that they're providing to individuals who are otherwise eligible. So again, individuals are going to get their state benefits plus the extra $600 a week. They're also going to get the leave for the 39 weeks. And so pinging back to what I said on the prior slide, this is attempting to mirror that most states provide 26 weeks of leave, and then you're getting an additional 13 weeks on top of that, which is the 39. So that's sort of the baseline, just getting us that the same financial remedies and duration is going to be applied under the extended COVID-related eligibility. But now let's turn to looking at who's going to be eligible for these benefits. And there's some key components on here to take a look at. First, individuals who are eligible who can telework are not eligible. And also, pinging back to some of the leave provisions we've talked about previously, individuals who are currently on paid sick leave or another version of paid leave benefits are also not eligible. So this is trying to make sure that there's not a double dipping and being very clear about when you're on a paid leave versus when you're going to be receiving these unemployment benefits. And on this slide, one of the key pieces is individuals. It's not just, and this is a point that I've heard a lot of discussion about, and this is the fourth bullet on here, but who's eligible? Self-employed. we're hearing a lot of this discussion about it. You do not have to be somebody's employee to be eligible. So independent contractors, the individual self-employed, the reduction of their ability to work due to shutdowns, it's capturing those individuals. So it is expanding beyond just traditional employees into this additional area that have not been covered by state unemployment. But to do that,
Liz,
sure.
Liz, if I could just jump in for a second, this is really the most radical element of this law because it expands. There was even a notice this morning from the DOL that it covered specifically Uber and Lyft drivers. So there's really an attempt by Congress to extend these laws in a way that no one had ever dreamt of. People might recall just months ago they were talking about who's a joint employer, who's an independent contractor, and how they're outside of the legal landscape. All of those considerations are now passed, and all of those folks are now eligible for this expanded unemployment compensation. It's a very radical proposal.
Right. Exactly. Thank you, Bert. So there are, in order to, you have to meet one of the enumerated 10, sort of 11 criteria. The 11 is a catch-all, so it's not really defined yet. So there are 10 defined criteria, and we're going to talk through those in detail in the next slide. So individuals who, and sorry, there you go. Individuals, some of these are fairly obvious, hopefully. But the first, anybody who has been diagnosed or is experiencing symptoms, COVID-related symptoms, and is seeking treatment, they are eligible. If a member of your household, individual's household, has been diagnosed with COVID, they are eligible. Also, if they are caring for a family member, or somebody in the family or household has COVID-19. So these are all sort of the concepts of the isolating. We don't want people being forced to come into work when they are sick. If there's also unable to reach the workplace because of COVID quarantines, this is getting towards to some of the stay-at-home, work-from-home orders that we're seeing coming out in various states. Moving on to the next. There's if you have obviously if a healthcare provider has instructed you to self-quarantine. Now, a piece on that is it does say that it is a healthcare provider has instructed. So that's something for employers to start looking at, is if one of these other factors, such as being diagnosed, they're a caregiver, somebody in their household has COVID, if those are not met, what is the basis for the individual deciding they want to self-quarantine to be eligible for it versus a healthcare provider? So these are some of the business considerations about where when you're allowing somebody to not come to work or not, they are only going to be eligible for the unemployment if it is at the direction of a healthcare provider. And documentation of that is likely going to be required when they are applying for the unemployment benefits, if they are checking the box for this basis of seeking the leave or the unemployment benefits. Excuse me.
And Liz, if I could just make a point.
Absolutely.
Yeah, I just wanted, before you move on to the other ones, we've discussed, and I think it's important for people to understand that those first 6 really do track quite closely to the reasons that employees can take paid leave. So as we mentioned, there's the reasons you can take paid leave, but if that work is not available, if someone is laid off or one of these other reasons, they also sort of flip it or push it towards the unemployment benefits and make them available for similar reasons where that work is not available. So I did just want to note those parallels between the two provisions.
Exactly, and right to what John was saying. Look at number 10. And one of on John's slide, it talked about individuals who the workplace is closed or not eligible for leave. Reason number 10, they are eligible for these expanded unemployment benefits. It also covers sort of this vague had to quit a job due to COVID. Not exactly sure what kind of documentation is going to be asked to justify that, but if an individual feels that they need to terminate their employment, they are going to be eligible for expanded unemployment benefits. And number 11 is an interesting, it's just a catch-all. It says any other criteria established under this act has not been defined yet. There are additional provisions of this act that are allowing for expansion depending on what happens and where we go with COVID. For example, the 39 weeks and the 13-week provisions also say unless expanded by the act. So they've built in some areas where without having to go back and fully issue new law, they can cite to these provisions that authorize them to go ahead and give expanded weeks of leave and or identify additional previously unknown reasons that could trigger the need to have expanded unemployment benefits. So that is a summary of where we are and who is going to be eligible for the expanded unemployment, and the amount of benefits they're going to be receiving. At this point, I'm going to turn it over to Bert Fishman to start talking about some of the business considerations that both the leave and the unemployment provisions trigger.
Well, thank you, Liz, and thanks, folks. In many respects, the core of the hope that Congress was trying to draft would be to help small businesses stay in business. And the way to stay in business is to provide funding for companies, small companies between under 500 or less, to fund the various payroll costs and other costs that they meet. If we'll go to the next slide, you'll get an example of what we're talking about. Now, this is designed to the Payroll Protection Program, the PPP, is designed to provide emergency lending to small businesses to cover the kinds of operating expenses that they have on a daily basis. And the whole idea is incentivize employers to keep employees on the payroll to keep their businesses functioning. We've all seen over the last couple of weeks millions of people applying for unemployment. This is supposed to be a hoped-for cure to help businesses stay in business. It's the core of the idea of not shutting down, so that when this outbreak passes, whenever that is, the business will be up and running so that it can again start our economy churning. Notice how broad the definition is. Everybody is in the pool. Nonprofits, veterans organizations, tribal businesses, sole proprietorships, they want this to be available to as many small businesses as possible. The bottom, there are even special rules for franchises, restaurants, people in the food and hospitality business. There's something called the waiver of the affiliation rules. It basically comes down to, if you're one of these large franchise businesses and you have 500 or fewer employees in a single location, you would, even though your business in general might be larger, you could still qualify for applying for some kind of a loan to cover the costs of staying in business. And that is the whole point of this law, and it is the most expansive of all of the plans offered here. There's $350 billion that have been allocated to this particular program, and it's being operated through banks, and we'll get to that in a minute. But this is the crown jewel. If the company wants to stay in business, there is a huge amount of money available to help a small business do so. The next slide will show what you can get and how you can use it. The maximum amount of a loan that a small business can receive is $10 million, and it will be based on most of the costs that you see there. There is a coordination similar to what we've seen between the paid leave and the unemployment. The way you compute what you're eligible to receive is coordinated with the kinds of costs you can use the money for. But it is a complicated and multifaceted computation. And you're going to need you're going to need your payroll team, you're going to need your accountant, you're going to need your tax lawyer. Fortunately, you've probably just completed your 2019 tax form, but there are a number of individual variations. For the most part, the loan comes to 2.5 times your average payroll, your weekly payroll. But there are many, many variations on that theme that would take the rest of this hour and the next hour to go into individually. But the important point here is to note what is included on the allowable costs. Most significantly for many people is health insurance, and you can get the idea that one of the reasons the government wants these small businesses to stay open and wants this program to work is that if it does not succeed and the businesses close, millions of people will be without health insurance during a time of a pandemic. So there is a strong incentive to do the computation, get your loan application accurate. Please consult with a multidisciplinary team so that you are accurate in terms of what you can, the maximum amount of your loan. Also, on the flip side, you want to be able to document how you arrived at that number, since much of that same documentation will be needed for loan forgiveness. If we can go to the next slide, we'll learn more about this. Part of the idea behind the PPP, the Paycheck Protection Program, is to convert the loan into a grant. And one of the ways you do that is by using the money that you get for the loan for the approved purposes we've just seen. And if you do so, and if you have the records, the loan amount has the potentiality of being forgiven. Again, it's a fairly sophisticated computation, and it is not just based solely on spending money on the enumerated approved little buckets that we just saw. There's another factor. Remember, the point of the program is to assist a small business in retaining its employees. So the loan forgiveness has a variable factor based on the amount of the number of employees or the percentage of your employees that are kept on the payroll, and the percentage of compensation that you've continued to pay, so that you can't cherry pick and try to get 80% of your least well compensated or 80% of your most well compensated. You have to do both. You have to find the formula that permits you to keep the appropriate number of employees employed who are also the appropriate level of compensation to continue to be on the payroll. If you meet those criteria, you have the potential for having the entire loan forgiven. If there are variabilities that don't match up, the loan is paid out over a long period of time at a relatively low interest rate. So the government is trying its best to make this program work for you. Many moving parts. You're going to need documentation. It's like compiling a second tax return so that you can show that the monies you received from this loan are being used for the approved purposes, and the forgiveness is linked to using those approved purposes. Although we don't have a slide for it, I know all of you have been reading, as we have, about the difficulties that some people and some entities, individuals and businesses have met in trying to get their loans. The only thing that I can say is this is a huge amount of money, a huge program. It's kind of like emptying the Chesapeake estuary through a residential plumbing. It's inevitable that there are going to be bottlenecks and tie-ups, and those have happened. But as you can see, the idea, there's a strong incentive for everybody, for Congress, for the Department of Labor, for all of the entities involved, the Small Business Administration, and each individual bank, to try to get this money to businesses. And the point is to try to do it quickly, because not many of these small businesses are going to be able to last more than 2 weeks, more than a month, without some cash flow coming in from this program. So although now that I'm sure all of you have read over the weekend or this morning in papers all over the United States about the problems that are being met in processing these, we pray that those things are alleviated soon, because the whole point of this program and the whole point of this really rather dramatically significant act by Congress gets money into the hands of the businesses who have decided that they want to stay open and that they want to keep their employees on the payroll.
I think one of
the... You can learn more. Just to say, you can learn more. Unfortunately, the rules have been changing almost nightly, but the best place to start is the small business link that I put there on the bottom of the page. I'm sorry, Liz, you were saying?
Oh, yep. Sorry, I didn't mean to interrupt. I was trying to chime in. I think one of the things that everybody listening in should take, one of the big key takeaways of what we're hearing from you, Bert, is you need to put together sort of a multidisciplinary panel. You need to have HR talking about your workforce and who you can put on leave and who potentially is going to be placed into the unemployment bucket. Talking to your tax and your business and finance people to figure out what is going to be beneficial for you with regard to these loans, because the percentage of retention of your workforce, which is often something that HR is looking at, that has these loans have key provisions about the percentage of retention of employees, which may feed in the decision about financially, do you keep them on the payroll or do you put them off onto unemployment? So the key thing we think about this is it should never be a silo. These are not siloed decisions to be made anymore. They're very complex and they involve many different elements of your business and teamwork in order to make these types of decisions.
Yeah, just to further that, I hope I made the point, but I will certainly make it again, is that the idea is try to fit this together. The analysis you do to compute the loan, to make the loan application, should recognize the kinds of documentation and the kinds of requirements you're going to have to meet to get the loan forgiveness. So you have to look at the thing kind of in toto, from the beginning to the end, so that you can see that the loan you're using the appropriate factors to apply for the loan, and that those same factors are the ones that the money will be used for, and the documentation of that linked to the retention of employees and the retention of compensation yields a forgiveness. So the idea of the act kind of fits together. I have to give Congress credit, which I don't often do. They have made this kind of one size fits into the next in a rather coordinated way. But unfortunately, some of the computational burdens are all yours. So when you make these efforts, do so, as Liz suggested, with your entire team, from HR to tax accountant. John, do we have any questions?
I think it looks like we've addressed all the questions, unless anyone has any more that they'd like to submit. I did just want to take a moment while we're giving people, if they do have any more questions, to touch on one item I left off at the beginning, and that is for those of you who did not log in last week to hear our more expansive discussion of the paid leave provisions. That webinar is available on the FortneyScott website. So certainly if you have additional questions, sort of laying the baseline for some of the updates we provided today, that is available there. We'd encourage you to see that. And looking towards next week, our briefing at this time with what's been put out is we certainly intend to cover any updates involving additional workplace issues, specifically remote work and people still coming into work. And we'll have a discussion regarding workplace safety and discrimination issues that could arise out of these circumstances that people are dealing with right now, and how to handle what we're viewing as an evolving workplace and workforce at this time. So that's what we intend to cover next week, and certainly, as I noted, each of these weeks will cover the updates as they come in, and they are coming in frequently. So we'll certainly cover those. And I'm not seeing any additional questions. I believe Liz and Bert, you covered them, it appears, as we were going through. So, it looks like we will wrap up a little bit early and let everyone get back to their day. But I just wanted to thank Liz and Bert for that presentation again today.
Wow.
And certainly, we'll be back next week. And thank you both again.
Thank you for attending.
Well, thank everyone for. I hope this was useful. I know this is an awful lot of information to get in a very short period of time. But if you do have questions, please let us know, and we'll do our best to respond.
Stay safe and healthy.
Yeah. Thank you, everyone.